It's a wonderful day if you are a bull, and it's a wonderful Wednesday. You're watching Trading Hour live from the CNBC TV18 Motilal Oswal studios. I'm Hormuz Patakia. Joining me today is Vinny Motiwala, and it almost feels like, Vinny, the fall that we saw yesterday is almost distant memory. A very good move both on the Nifty and the broader markets as well. And the earnings season is gearing up for one last hurrah in today's session.
Absolutely, one last hurrah for the earnings season. We'll also be cheering it because finally we could maybe get some breather. But 24,900 is what the Nifty is holding on to as of now. Not at 25,000, but look at it. Almost at the day's highest point as of now, up almost 1% in today's trading session is what the Nifty is trading at. Let's look at the Nifty Bank also, because that's also managing to hold on to somewhat of a green in today's trading session. So Nifty Bank also is what is holding on to 0.7% of gain. Broader end of the market too, performing in tandem with the benchmark indices. So yes, that's also something that has led to some bit of an up move. That outperformance is not there right now from the broader end of the market, but at least in tandem with the benchmark indices, almost there's nothing to complain, right? Because yesterday was a bit of an underperformance.
Now, you know, from a fear of testing 24,500 on the downside, you would take 24,900 any day, right? Hoping that it would go towards 25,000 as well, tomorrow being the weekly expiry. So we keep an eye out on that. But of course, there are a lot of stock-specific reactions. As we just mentioned, the earnings season is going to take one last hurrah in today's trade. There are a slew of results that are lined up today, be it on the Nifty, be it on the broader markets as well. So a lot to talk about as we go around on the show. But with corporate conversations, then Arvind Smart Spaces is the first management on our radar today. The stock is trading lower, bucking the trend in what is an otherwise a very strong market after its fourth quarter results. Collections remained flat. Bookings have grown 18%. Now, to discuss more on this, we are now being joined by Kamal Singhal, the managing director and CEO of the company. Kamal, good morning. Thank you for joining in. You know, your bookings growth, you had earlier mentioned at the start of the year that you are going to have around about 30% growth in bookings. You finished the year at half, which is at around 15%. What has led to this, and are you expecting things to normalize in FY26? What is the bookings growth target that you have set for this year?
Yeah, very good morning. And you very rightly pointed out that the booking growth normally is supposed to be between 25 and 30%. That's what we have been always talking, achieving in the last few years. This year has been 15%. It is mainly on account of a couple of launches which we missed in the Q4 of last year. And this essentially means that this will be shifting to Q1 and Q2 of this year. And hence, on a long-term basis, on a block of 2 to 3 years, the growth trajectory remains the same. And on an average basis, we should be able to continue to achieve 25 to 30% growth. And this loss of a couple of hundred crores of fresh sale that we saw in the last year should be covered up in the coming year, in the current year.
Sure, Mr. Singhal. Good morning. This is Vinny joining in the conversation as well. While you said that, launches were delayed from Q4, now maybe we could see it in Q1 and Q2. So what is the outlook in terms of pre-sales growth that we have for FY26 and over the medium term as well, if you could highlight that?
Sure. Our long-term CAGR on fresh sales has been 25% thereabouts. And because we've lost some bit of it in the last year, obviously this will get pent up in the coming year. So if the growth was supposed to be around 25%, 30%, this year we're looking more like 35 to 40% growth put together within 2 years.
But what about collections, Kamal? Because your collections were flat, that you missed the 1,000 crore mark here as well. Do you expect to achieve that this time around? And if you could share what is the kind of number that you're anticipating in the ongoing quarter, considering you're almost halfway through the June quarter as well, can we expect, would it be fair to say that 10% growth in collections for FY26 is a fair assumption?
Yeah, it will be a very fair assumption to make. And of course, collections are dependent upon how much we are able to launch and sell fresh. And that is expected to be getting covered up this year. And hence, there will be a healthy collection growth as well that we are expecting to see this year.
What about the launch pipeline this time around?
Our launch pipeline has been absolutely great. We are hoping to launch almost like 4,000 crore rupees of fresh projects this year. And these are very well distributed between all the three cities, Ahmedabad, Bangalore and Mumbai put together. Mumbai will be our entry this year for sure. Yes. And all in all, 4,000 plus crore rupees will be the fresh launches this year.
Okay, 4,000 crores fresh launches. I want to specifically now just talk about the MMR region. I want to know one, you said your entry coming in, right, for this. So expansion strategy there. Any acquisitions that you may be looking at in the near term, your target in GDV as well as strategy for redevelopment in this area. So a couple of questions I'm putting in over there together, but all for the MMR region.
Sure. Mumbai is one of our important growth pillars now from here onwards. This is the third city that we want to add in our portfolio after Bangalore and Ahmedabad. We sometime back announced one big project in Pen-Kapoli area with a top line of around 30 and 50 crores. This is going to be our first weekend home project getting launched this year. Apart from that, we are very seriously looking at society redevelopment. In fact, we are very close to announcing one society redevelopment project in near future. This remains our very clear focus area. Our strategy in Mumbai has been slightly differentiated. It's going to be focusing on weekend homes and society redevelopment on the other hand. And we are hoping that at least a couple of more projects will be acquired this year in our
Okay.
portfolio from Mumbai.
So where is this redevelopment project? Announcement expected in Q1 itself?
Yes, it's expected to be announced in Q1. Yes.
Okay. And what would be your target GDV, especially coming in for the MMR region? And also in terms of the area, if you could highlight which area are you looking at in terms of redevelopment?
So redevelopment will be all these areas which are not very high priced areas like a lakh rupee, lakh and a half rupees per square foot. We are more focused on something which is in the region of 30 to 40,000, 50,000 rupees per square foot. Your Mullans of the world or your Bandras and other things. So that's what we are targeting when it comes to society. And weekend homes, of course, is in the periphery of like your Mumbai 3 and areas like those.
Kamal, if I heard you correctly, you mentioned that you're planning to launch some weekend homes in Mumbai. But for an average Mumbaikar, you would wait for a weekend to get out of the city. What is the rationale behind this, if you could explain a little bit? And I'm just adding on to the on-ground demand as well. What's the current situation like this quarter? And have you seen any slowdown in terms of mid-income housing?
Sure. Well, coming to the first question first about the weekend homes in Mumbai, I think Mumbai has not seen the kind of action that other cities have seen. For example, Ahmedabad has a very evolved market on weekend homes. Bangalore has caught up in a very significant way. We in fact had very interesting and successful launches in both these cities. Now we want to replicate our experience here into Mumbai market. Mumbai market is very significantly underserved on weekend homes. We sincerely believe that the kind of cramped houses and the cramped living space that Mumbai has, it needs more weekend homes which have fresh air, open areas and lawns and gardens, etc. Of course, it has to be within the limit of time that one can spend on travel. So that is more like hour and a half. That's what we are very clearly focused on. Atal Setu, for example, has opened up this avenue for us, and we are focused on that. So we are very excited. There's a lot of innovation to be brought into the market. And given the size that Mumbai is, it's very underserved. And that presents us with a huge opportunity in our understanding. We are up to it. So that's one. On the demand side, I think demand is still very healthy. Of course, it varies from micro market to micro market. For example, Bangalore will have pockets which are a little slow, and there are pockets which are doing absolutely great. So it's about choosing the micro markets correctly and smartly, and market thereafter is supporting pretty well, and the demand is still holding.
Okay. Also, what would be the range of these weekend homes in terms of the pricing? Is it going to be, the luxury side? Given that, that's going to be more space, then it's going to be expensive.
Yeah, but we are very clearly focused on upper mid and slightly below ultra luxury. So it will be more like a ticket size starting from 1.5 crores, 2 crores thereabouts, and it goes all the way up to 4 to 5 crores. So in that sense, for a weekend home, this is a price which is above mid-priced homes, but at the same time, it's pretty affordable.
Okay. And what's the update in terms of the Surat project that you had over there? Because I believe at some point of time there was some issue with the JV partner. So what is that? Has that been resolved, and when can we expect the launch?
So we are still in the process of resolving it. We are very hopeful that it should get done very soon. And Surat is something that we are very excited about entering. Hopefully, it should be getting resolved. It's a very large project. It has a very large land parcel of more than 500 vigas, which is more like a 300 acres. So it's getting resolved. It's a large one, and we are working on it.
Do you expect a resolution by the end of this quarter, Kamal?
Maybe not this quarter, but next quarter for sure. Yes.
All right, Kamal. Thank you so much for sparing time and joining us today. Wish you good luck for FY26 as a management there of Arvind Smart Spaces. An interesting insight there, looking at holiday homes in Mumbai. Of course, maybe on the outskirts, as Kamal was mentioning, around an hour and a half or 2 hours away from the city. But yeah, that is the strategy for Arvind Smart Spaces. And of course, that cramped up homes was a little personal. But we'll take a short break here on Trading Hour. Up next, we discuss what's buzzing in the commodity space. Manisha Gupta on the other side. Stay tuned.
Welcome back to Trading Hour on CNBC TV18. Now let's shift focus and talk about what's happening in the world of commodities. We have Manisha joining in with us as always to take us through what's happening there. Manisha, today we're focusing on crude oil prices.
Oh, yeah.
You know, they've remained at that 60-66 mark. Are we expecting an uptick now there? Is it a worry?
I hope not, because, you know, if you look at the last 2 weeks, it has been gains for the crude oil prices. And this week is no different, because we're trading at around $65, $66 a barrel right now. It was a percentage point of gain in the New York session yesterday, and Asian markets have opened more than a percentage point of gain yet here again. Well, there are reports of Israel preparing to strike Iran nuclear facilities, and that is what really seems to have bothered the market. If that happens, then you are looking at a more larger regional concerns coming in there. And apart from that, Iran, remember, is the third largest oil producer within the OPEC as a segment, and there are fears of then Iran as well disrupting the Strait of Hormuz, and that is where you see most of the Middle East oil flowing into the Europe and the Asian markets there. So this could really become large, and that's the premium that we are seeing in prices exactly because of that. The second factor is about the uncertainty between Russia and Ukraine. There is still no conversation about ceasefire, and ceasefire clearly seems far away there. So these are a couple of things which seem to be supporting. The third factor is about the dollar index, which has seen a decline, and that has led to a lot of these tangible commodities actually trading in the positive right now. Couple of factors which are also capping these gains. One is the U.S. crude stocks, which have continued to increase, and the U.S. in production itself is near record high. So that is something that the street is looking at. And then within the OPEC members as well, Kazakhstan being one of them, also has seen an increase in production. So supplies is not a concern, but supply disruption can be a bit of a problem, and that is a premium because of that.
Supply disruption, a concern indeed. And back to these geopolitical tensions, right, that are supporting prices for crude oil as of now. Manisha, thanks a lot for that update. By the way, the Nifty continues to remain around that 24,900 market. Look at JK Tyres. The earnings call is set to take place in just about a few minutes from now, but the stock is up 8% after its results, which were on the weak side. On the operational front, both India and Mexico businesses saw a decline, but the stock is at the highest point of the day. GSK Pharma is up 6%, Amber Enterprises is up 6%, and this is in contrast to the fall that you're seeing in Dixon Technologies. Although Dixon has recovered from the lows of the day, still trading with losses of around about 4.75%. So keep an eye out on all of these names. We'll continue the markets conversation just after this short break. Vishal Malkan joins in with a chart check and some trading ideas.
You focus on the gemstone side of the story?
So I think it's really making our customer the true north. So when we introduced the good, better, best heirloom, no one else had done that before. So we pioneered in introducing different qualities, different sizes, different metals all together. And so no matter who the customer was, you could get exactly what you wanted, provided you like that design sensibility. And that's really helped us take off.
What we're seeing in the jewelry market worldwide today is this big takeoff as far as lab-grown diamonds are concerned. In fact, you believe that this is the Kodak moment for the diamond industry. Why do you say that?
The Federal Trade Commission in the US said a lab-grown diamond is a diamond. They're chemically, physically, optically identical.
Okay.
So all of a sudden, it legitimized the entire industry for everyone. And now, you fast forward 7 years, you can get a lab-grown diamond for 90 to 95% cheaper. It's going to be very difficult for natural diamonds.
Welcome back. Earnings reactions, potential earnings. There is a lot to track as we go into the second half of the today's trading session. So we'll get you a mix of both in this segment. We have Upasana joining in for Dixon Technologies. We have Vivek also telling us why Dredging Corp is surging in today's session. And Abhishek is also here to tell us what to expect from IndusInd Bank, which has been in the line of fire recently. But first up to Upasana on Dixon, on the numbers, brokerages, management commentary. Upasana, summarize it for us.
Well, the company's growth this time around was continuously led by the company's mobile and EMS segment, and company has also reduced its contribution in all the other segments barring the mobile segment. Now, if we talk about the FY25 revenue, it stood at 38,860 crore and company has missed its 40,000 crore FY25 guidance. Now, talking about the Q4 numbers, while the margin remained upbeat, revenue and PAT was in line with our poll. Now, coming to the brokerages, Nomura on the back of this has given a buy rating on the stock with a target price of 21,202 per share. It says that the mobile ramp up on track across domestic and exports and rising value addition is likely to aid margins going forward. CLSA has given a high conviction outperform rating on the stock and has also raised the target price to 19,000 per share. It says that the Q4 was largely in line, and on strong top line growth and better margins, the brokerage expects 45% PAT CAGR over FY25 to FY28. Now, management joined us today morning on the back of its results, and it has indicated some of the important highlights. Management expects 40 to 45% revenue growth in FY26 with 20 to 25 bips margin expansion in the current year. It expects revenue to more than double in the next 2 to 3 years is what they have indicated, and the company is anticipating export contribution, which is currently 5% of their sales, to also increase going forward. Company has also indicated that it is in the advanced stages in closing partnership for camera modules, which remain one of the key highlights in the past few quarters. And also in terms of margin expansion guidance, company has said that it expects that 90 to 100 basis points is quite doable in the next 2 years. So all in all, a beat commentary, and even from the brokerages and management as well.
All right, Upasana, thanks a lot for that. Dixon Technologies there. Possibly the stock off the morning, slightly off the lows of the day, still holding on to losses of around 5%. But on the flip side, the other stock that is doing very well as an earnings reaction is Dredging Corp. The stock is up 13%, and Vivek is here to tell us why, Vivek.
Well, that's right. So Dredging Corp, not a stock you talk about too often. And in fact, whenever we speak about it, it's always been in back of slightly unfavorable light. But today, the story is quite different. Q4 FY25, now off a very low base of Q4 FY24. It's been a substantial increase across all of the parameters that we tracked. So revenues higher by close to 67% on a year-on-year basis. EBITDA at the 77 crore mark, up 4 times from what it was in the same quarter last year. Margins expanding almost 1,000 basis points. Profitability this time around versus the loss that was seen last time around. But if you have to look at the sequential comparison as well, even there has been substantial improvement. Revenues on a sequential basis, has actually gone up almost 42%. Profitability up 33%. However, one thing that investors do need to keep an eye out on is the fact that on a year-on-year basis, when you're comparing FY25 to FY24, revenues, the growth over there looks slightly subdued. So revenues at 1,140 crore versus 945 crore. And it's actually a loss that the company has seen this time around, impacted by a one-off exceptional item of close to 18 crore. But despite that, it was actually a loss in FY25 for the company. Nevertheless, on the back of very strong Q4 FY25 to close off the year, it's a significant up move that you're seeing in Dredging Corp today.
Okay, now let's go across to Abhishek, who's here to tell us what's happening with IndusInd Bank. Abhishek, over to you.
While IndusInd Bank will be reporting its numbers today, watch out for the fact that they can report a net loss as per analyst poll this time around. So they have already given a business update, which is one of the weakest that you are seeing in last 17 to 19 quarters with respect to deposit and advances movement on a year-on-year basis. Now, net interest margin can decline both YOY and quarter-on-quarter. Analysts like Kotak Securities estimate 67 basis point decline, decline YOY and about 21 basis point decline sequentially in net interest margin. Now, operating profits that can be on the weaker side. Again, Kotak Securities estimates 67% of YOY decline and about 63% on a sequential decline in operating profits. Credit costs can remain elevated. We know that they have to make provisions with respect to that derivative loss as well as the MFI segment. So let's watch out for the provisions which can remain elevated this time around. Slippages to rise quarter on quarter led by microfinance sector. Kotak Securities estimates a slippage ratio of 2.7% versus about 2.2% in the previous quarter. Now, asset quality is expected to remain stable as per Motilal Oswal. So high write-offs can be one of the reasons that you might see asset quality stabilizing despite higher slippages. So Motilal Oswal estimates a gross NPA ratio of 2.4% versus 2.3% in the previous quarter. Now, commentary with respect to new management team formation as well as business momentum going ahead will be a key important factor to watch out for from the management side. Our poll suggests NII to decline by 11.5% YOY and about close to 9% sequentially. We are working with a loss of close to 514 crores versus a profit of 2,349 crore in the same quarter last year and about 1,400 crore of profit in the previous quarter. Back to you.
We'll be watching out for IndusInd Bank, possibly the result of the day that we'll be keeping an eye out for. And as Abhishek was mentioning, the lender could report a net loss in today's trading session. But time for a quick chart check then. Vishal Malkan of Malkan's Views joining in now. Vishal, good morning. Thank you for joining in. A dip yesterday got bought into very swiftly. What next for the Nifty and for the Nifty Bank as well? Which among the two looks better to you?
Yes, I think we are into that zone where the undercurrent of the market is so strong that every time there's a dip, there's a strong buying coming up, and there's a strong support zone on Nifty, which is 24,700 to 24,800. That's where it gets a bounce from. And on the higher side, it's 25,200, which was the high made a few days back. So that's a very tight range, but overall undertone is bullish. And I would look at Bank Nifty as slightly subdued compared to Nifty, with support around 55,000 and on the target on the upper side is 56,000. It's a very tight range, so I'll go more of stock specific rather than trading the indices in these days.
Okay, Vishal, are you looking at any specific stock? Like you're saying, you're looking at more stock specific, right? So which stocks, which sectors is that coming from?
So the first one which I look at looks very good on the chart and has given a great breakout and continuously making higher highs is MFSL, and it's all bullish on monthly, weekly, and daily chart. The RSI, the patterns, the momentum, everything is on the positive side. So I'll go with a buy on that with a stop of 1370 for targets of 1430 and 1460 in the next few trading sessions.
And any other on your radar, Vishal?
I'll go with the defense, which is BEL, which is the favorite, and I think it's again same thing happening on that, making higher highs continuously. No signs of resistance, and because it's a new zone for the stock, so there could be the next target for this would be 400 with a stop of 365. It would be a good pick.
Okay, Vishal, thank you so much for joining in with us, talking to us about your top picks as well as in terms of the levels of the market that we're watching out for right now. But on that note, we're going to slip into a very short break. Up next, we'll discuss market fundamentals with Chakri Lokpriya from LGT Wealth India. So don't go anywhere. Welcome back to Trading Hour on CNBC TV18. Now let's bring on board Chakri Lokpriya from LGT Wealth India, joining us to discuss the market fundamentals and his top sectoral picks. Chakri, good morning. Thank you so much for joining in with us. Let's just start by talking about the defense pack. Railways, defense, that's been the trend last couple of weeks. Seems like it's losing a bit of steam. But for your view coming in here, is it still something that you would look at fundamentally?
Good morning and thanks for having me. If you look at the defense pack and railways, first defense. Now, we've had the India-Pakistan problem at the border, and post which, now the government is ordering an emergency order worth about a fairly big order, and this will benefit a number of defense companies So that revenue estimate will actually be bumped up for Bharat Electronics, Hindustan Aeronautics, including Mazagon Dock, for multiple reasons. One is, the surface-to-air missiles, drones, all these which were used in the war that we had with Pakistan, those need to be replenished and then ordered some more. So against that backdrop, the revenue and margin outlook for the defense companies, in spite of running up, looks pretty strong. And therefore, we would continue to be holders and maybe incrementally buy into these stocks.
But even at these valuations, Chakri, despite the kind of move that you have seen in a lot of these defense names, some of them were up 30-40% last week.
Excellent question. They have run up. But if you look at the outlook, both domestically as well as new orders are concerned, and plus export orders to Europe, I think both these things have upside estimate risk to the upside potential, and therefore we could buy. But clearly, as you said, that they're not trading at these levels. They're investments worth buying at current levels too.
Okay. Chakri, any specific name you would like to give us in both these spaces, especially defense and railway, that one could still look at right now?
In defense, it will still be, stick to Bharat Electronics, Hindustan Aeronautics. Hindustan Aeronautics supplied drones for the latest India-Pakistan war. And, outside of that, Mazagon Docks as well. Now, if you go to railways, I think, it's a slightly different cup of tea. They're also looking strong. If you look at a company like Titagarh Wagons, it's trading at probably about 19-20 times. Now, post this warlike situation that we had, we are likely to see an increase in railway spending along the northeast border and against, of course, the various parts of India. This will again boost the order book for the railway companies as well. And, the government has the budget. RBI is supposed to release a budget, and this will further help the companies.
Right. Chakri, a lot of these names that are reacting to results today, these electronic component manufacturing companies, say the likes of Dixon, they operate on very thin margins. Even this quarter, the positive was that the margin was 4% or close to 4.5%. At that sort of margin, at that profit, at that kind of market cap it trades in, does it still deserve the valuation premium that it has, especially considering the PLI is going to be phased out next year? The level playing field is going to be equal for all companies. What do you do in a stock like Dixon that has run up so much and now is positioning itself as the premium player in the segment?
Yeah, Dixon is, revenue has reported about 120% up. That's no mean achievement. And second, all the component areas, electronics, LED, TVs, as well as mobile, all these are growth areas. And even if PLI is phased out, still there will be another form of incentive scheme that the government is likely to introduce because, still Indian manufacturing has to pick up in many ways. Yes, these are expensive stocks, but stocks worth buying for the longer term, not for trading. From that perspective, Dixon, yes, for the longer term.
Okay. Chakri, your thoughts coming in on two sectors, that do have exposure to the US, and IT as well as pharma. Is there anything that you like in these names, or are both these avoid, given that there are tariff issues that are going on? IT itself, as of now, large cap companies have not given any sort of a very bullish, positive commentary. So what are we watching out for?
You're absolutely right. The commentary has been kind of uncertain. This is because of the tariff situation. But there is no tariff anyway on services companies. We know that. But the uncertainty is, will it slow down US IT spending? We will have to wait for another quarter. Meanwhile, the second fear is, will AI take away some of the growth from IT services? Maybe not, actually, because it will actually prove to be margin accretive over the longer term. So I would incrementally buy into Infosys, TCS, Wipro.
What about auto, Chakri? Because even here, just like pharma, auto is a very broad gamut as a sector. You have two-wheelers, you have four-wheelers, you have tractor manufacturers, you have auto ancillaries. Where do you see yourself placing your bets in, especially considering that the on-ground situation currently is not the best for the industry, be it in terms of the tariff-related concerns or be it the own domestic demand? So where do you position yourself on the auto space?
The auto demand, like as you pointed out, is indeed weak. The first pick of growth was likely to come in the two-wheeler space, TVS Motors, Hero MotoCorp. TVS has done very well. Hero MotoCorp has kind of underperformed. There is valuation comfort. And moreover, second leg of growth, EVs, all these companies are expanding their presence. That will provide another leg of growth. So, the cyclical uptick in volumes for TVS Motors and Hero MotoCorp, we're likely to see, therefore, will buys. Now, ancillaries, companies like, Minda, Motherson Wiring, these companies are again expanding their product range, will benefit if the tariff talks with the US go well. Their export volumes can kind of improve. But that's more a wait and watch.
Okay. You have any specific thoughts coming in on the metal side as well? There is a lot happening. Hindalco also came out with its numbers. Anything you like there?
If you take Hindalco as, it trades at only about 5 times EV EBITDA, so it's not an expensive stock. The question is about, its outlook, growth outlook. And the growth outlook is kind of going to be subdued until about you have a free trade agreement between USA and Canada, because that's where one of its plants, Hindalco's plants, is located. And on the domestic side, I think largely things are still okay. So net at 5 times EBITDA, valuations are fine, could incrementally buy.
Chakri, pleasure having you as always. Thank you so much for sparing time and joining us today. Chakri Lokpriya there on his view on the markets and specific sectors as well. The Nifty has seen a slight cool off from the highs of the day, now at 24,850, still 170 points higher. So no reason to complain, but there is still some resistance seen at higher levels. Take a short break. We get talking with the management of J. Kumar Infra on the other side. Nalin Gupta joins us to discuss the road ahead for the company. Welcome back. Continuing with corporate conversations then, J. Kumar Infra had a steady quarter this time around. Revenues up 14%, EBITDA was up 16% as well from last year. Margins, though, were remaining flat from the year-on-year basis. To discuss this and more, we are being joined by Nalin Gupta, the Managing Director at J. Kumar Infra. Nalin, good morning. Thank you for joining in. You ended the year with a top line of around 5,700 crores, which was in line with what the street was anticipating. But margins have remained flat as well compared to last year. So despite this top line growth, what are the targets that you are projecting for FY26, and do you expect margins to be better this year compared to what you have seen over the last couple of years?
Well, so good morning. And firstly, I would like to say that yes, we had made a EBITDA of totaling around 826 crore, which is a growth of around 17% on FY26. And as a margin, we can say at 14.4%. And we are looking at improving this EBITDA margin going forward in 6 to 8 quarters from 14-15% to 15 to 16%. And also it is pertinent to mention here that if you look at the ROE of the company, which was 10.4% in FY22 and 13.2% in FY24, has gone up to 13.8%. And EBITDA as well, as I mentioned, in the coming 6 to 8 quarters, we look forward that we'll be able to increase it by 1 basis point.
Okay, Mr. Gupta, good morning. This is Vinny joining in the conversation. So you're saying margins 15 to 16% is what we could expect in FY26?
Well, I have mentioned it as 6 to 8 quarters. So in the coming 2 years, our endeavor is to increase it by 15 to 16% range.
Okay. And for FY26, what would be the top line growth that one could envisage? Would that, 6,300 crore, 6,500 crore be achievable?
Yes. If you look at the total order book of the company, we are already, we have an order book of around 22,000 crores plus as on FY25, March FY25. And there are good orders in pipeline as well. This year, we have bagged orders of around 4,700 crores. And there are bids in pipeline worth around 25,000 crore that we are expecting. So we are very hopeful of bagging around 6 to 8,000 crores worth of order for the coming year, that is FY26. So we are very hopeful of making a top line of 6,500 crores plus for the coming year.
But Nalin, even if you bagged orders of around 4,700 crores in FY25, your guidance was anywhere between 6 to 8,000 crore, and you were also L1 in a lot of the projects when we spoke previously. What happened? Was there any delay in ordering, tendering, or was there any cancellation of any project that you have witnessed?
Well, so currently there is no order cancellation that we have seen, and the order movements are a little slow in terms of the one which we have already, we are L1 into. But this 4,000 crore, we are talking about the orders which we have been already awarded, which does not include the L1, which is close to like 4,000 crore separately. So means my target of 6 to 8,000 crore that we are saying that J. Kumar should be able to make is basically for the upcoming FY26. And if you look at the, if you talk about the top line for the next year or the coming 3 years, we already have a secured order book, which is of 22,000 crore plus, which is well comfortable to take care of the coming 3 years top line for the company.
What about the tendering pipeline, Nalin? Any projects that you have bid for, you are looking to bid for? What's the potential order pipeline they are witnessing in this quarter?
Well, so in this quarter, means we have already bidded for new projects worth around 3,000 crores. And there are some tenders that we have to submit within a month or two's time. So, which is like for the Pune Metro, for Thane Metro, which has come up. Thane Metro has come up with an integrated outer ring road metro for which will be submitted in the next month. Similarly, the Pune Metro has also come out with an underground project of around 1,700 crores. So both these projects will be submitted very soon in a month's time. So if the tendering process is free, means I would say a little faster, we should be seeing new orders coming in this quarter as well. But if you talk as an overall, 6 to 8,000 crore is something which is a comfortable number which we intend to back for this coming year.
Okay. Mr. Gupta, I want to understand in terms of metro projects. Previously, when you had spoken, I think you had mentioned about, metro projects being a major contributor in terms of whether you look at revenue or order book. Currently, that's here at around 17% for FY25. So how is that moving forward? When do you expect it to increase, to a major contributor? How much every year do you see this increasing by? And also, how is the margin profile for this? Is it better for metro projects?
Well, so if you talk about metro is one of our specialized segment, which is similar to the elevated corridors that we have been doing. So this percentage basically keeps varying depending upon the opportunities that's there in the industry. And currently also there are good amount of metros that are coming up. Like Delhi Metro is coming up with new projects, Pune and Thane. We can already see the tenders which has been floated and which will be submitted in a month's time. As well as Bombay Metro is also eventually coming up with Metro Line 10, Metro Line 13 and one more line of 13 and 10. These two metro lines are expected very soon. So metro or elevated corridors, if you look at my total order composition, you will see that 50% of the order book comes in from elevated corridors as well as flyovers. So this is basically a specialized segment where J. Kumar specializes and we have a niche over the other companies. So that's how, if you see that 50% of the order book is coming in from flyovers and elevated corridors, 17% from metros, and road and road tunnels is around 18% and 16% others. So this proportion keeps changing depending upon the opportunity. And in both these areas, we have an upper hand, I feel.
Nalin, at the end of FY24, you had given a vision 2027, where you're expecting around 25,000 crore plus in order book, $1 billion in revenue, 15 to 16% of operating profit margins. Are you on track to achieve all of that?
Well, I would say we are very much on the track. And if you look at the top line of this company, of J. Kumar, we had given a figure of close to like 5,400 to 5,500 crore, which we have already surpassed. So which I think the numbers itself speak about the performance of the company and the dedicated team of J. Kumar. We are very, very sure and confident that we should be able to surely meet the targets that we have planned for.
Okay, just a last word, Mr. Gupta. Execution, how is that shaping up? Is that in line? Is that seeing a pickup? What is the scenario right now?
Well, I would say the new orders that we have bagged in FY24 has already started contributing the revenue for these new projects. And in FY26, we should see a substantial contribution coming on from the new projects. So the government, I would say, is very, very particular about the execution, about the timelines. And I feel that there is a good support from the entire government sector. And this project should really see good speeding up and ramping up in the progress.
All right, Nalin, thank you so much for sparing time and joining us today. Wish you good luck for FY26. The management there of J. Kumar Infra maintaining that they are on track to achieve their Vision 2027. Take a short break, but just as we do that, here's some good news for our viewers. India's business news leader is now just a click away, and that, of course, is the all-new CNBC TV18 app, where you get breaking news updates, in-depth articles and financial world stories right at your fingertips. You can download the app from the Apple Store or the Google Play Store, or even scan the QR code that comes up on your screen and download the app. Take a short break, back on the other side.
Welcome back to Trading Hour on CNBC TV18. Markets and Nifty has come down a few points from the 22,900 as of now at 22,824 level. So let's keep an eye out on where it's headed in the second half of the trading session. But let's move on. And will they or won't they? That's the question on everyone's mind as digital payment firm PhonePe eyes the D Street debut. CNBC TV18 Shireen Barnes spoke to Sameer Nigam, the founder and CEO, as well as Rahul, the Chief Technology Officer at PhonePe, on IPO plans at the startup space and much more. Listen in.
Can you look me in the eye and tell me what's changed today? What gives you the confidence of wanting to go for an IPO today?
I think the profitability part of it, we reported we shared our annual report for FY24 already, and we were adjusted PAT positive for the first time, so I'm very happy about that. I think directionally too, I think the company's at a stage where I feel like the core payments business, consumer and merchant combined, is at a stage of maturity and market leadership where we should, hopefully from here, remain sort of very, very stable and hopefully quite profitable in years to come. Conditioned well enough to say without setting any targets or goals. I think it's the right time. I think the business is in a good place, the org is in a good place, the sector is in a good place. Payments is still growing very rapidly. So if you're a market leader in a growth sector, I think it's a good time.
So Rahul, did the two of you sit and have a conversation about it makes sense to do it now? This is the right time, this is the moment, and we should go all in?
Oh yeah, we have a conversation about everything. I think we have more conversations with each other than our wives.
Well, you've known each other longer than you've known your wives, so it makes kind of makes sense.
That is true. No, we did have a conversation. I think like Sameer mentioned, just given the current state of the org and the business, specifically on the core offering that is payments, given how exciting financial services and payments in India is, and the fact that we also have a few new businesses that we are diversifying into, we felt that this is the right time where the core business on the path to profitability, being able to actually nurture new businesses, is the right time to take PhonePe to the public markets. It is also a reflection of our maturity as a company from a compliance and governance perspective, that we are ready to actually take on this larger role. So yeah, we did have the discussion and felt that it's perfectly the right time to actually push forward.
But you know, as you pointed out, this is not your first rodeo. You've both have been around the block and you've done this several times over. And I want to go back to the Flipkart days and the Flipkart Association, because I was telling Rahul before we started that in many ways, you know, what HUL is to sort of the legacy companies as the CEO factory, Flipkart kind of has done that for the digital ecosystem, has it not? And you're kind of part of that story in many ways.
Flipkart, I think
over 100
people talk about the Flipkart mafia and all the startups that came about. I think
you're part of the mafia.
I'm saying, I don't think people understand. It's not just in Bangalore. I think the change in psyche in 20-year-olds and even late teenagers today, where everyone wants to actually get out there and ride the sort of startup wave and try their luck at building something, being innovators, that fearlessness you see today, which I think we all celebrate. I think so much of it can be mapped back to that one company, and I think the two Bansals, but they also had a phenomenal group around them. They're early believers.
Yeah.
We joined a little later. We were missionaries, but we were late missionaries. They already had a very strong core. I tell people at PhonePe this often. I have a tremendous amount of pride in the talent and our bench strength, but there was a point at Flip where the caliber of the bench strength was actually scary good. Right? I mean, every IIT graduate and every IIM graduate was working there, and every lateral, peak of their career, sort of smart person that I know of. And I think the country, forget markets and IPOs and all this stuff. The country owes companies like that just as much as we do in this generation, just as much as you do for the Tatas for creating haloed institutions. Definitely the OGs in the space. I mean, there's no doubt in my mind.
Right. I think it's the startup university.
Still
equal number of good decisions and bad decisions.
Yeah.
But the fact is that looking back, vision is always 2020. And I think we have that advantage building PhonePe after having seen the Flipkart journey, because there's so many learnings, right? There's so many learnings in terms of, we were talking about incentivization, cashback, use of data, building for scale. I think a lot of us who have graduated from that startup university called Flipkart enjoy having that 2020 vision when it comes to actually building a startup today.
How do you look at competition? Do you look at competition from the perspective of focusing on your competitors' strengths or your competitors' vulnerabilities?
Definitely not the vulnerabilities, because that's a perverse game, right? I think even on the strengths, I think we definitely look at whether they're innovating in interesting ways.
Who's innovating today, to your mind?
I think shamelessly, I think in our sector over the last 10, 15 years, the most innovative by far and away has been Paytm, and we talk about this. I think it's fair to say that.
Yeah.
They brought the wallet to market, they got the QR to market, they got the soundbox to market. They've done a lot of things. I think that's perfectly all right. I should be able to say that my competitor is actually very innovative, right? I think Cred got gloss to design. It's glossy. It looks like really polished. I think each of our competitors, there's certain things that they do better. BillDesk is the OG in payments for 20, 25 years. They've gone into the hardest work in the entire sector. They've gone and taken state utilities and digitized them, right? So huge respect, because we all benefit. There's no BBPS if there's no BillDesk.
The top brass of PhonePe, or shall I say IPO-bound PhonePe. We'll hear from them soon on the Dalal Street debut. Of course, the market has come off the highs of the day, almost a 70-point downtick now from the day's high of somewhere close to around the 24,900 mark. So we are trading around that 24,800 now. So almost an 80 to 90-point downtick that we are seeing off the highs of the day. Dixon Technologies is back down to trading 6% lower. So the bounce that had come in from the lows of the day has now been sold into again. So they keep an eye out on Dixon, still the top loser on the Nifty 500. Nugent Software is down 5%. KPR Mills, after the block deal that took place earlier in the day, is also down 5% in today's trading session. On the flip side, though, look at Tata Tele. That has sprung up among the list of gainers now, 5.5% higher on Tata Teleservices. So that stock is on the radar as well. A lot of these mid-cap pharma names are doing well for themselves, be it the likes of Kaplan, Point, GSK Pharma. Gland Pharma, of course, is a results reaction, and Piramal Pharma too, trading with gains of anywhere between 3 to 3.5% in today's trading session. So mid-cap pharma is one. We're counting down to at least 7 PSU earnings we need today, be it ONGC, Oil India. There are railway names that are reporting results. There is Nalco that's reporting results. So a whole host of PSU names. We'll keep an eye out on that in the second half of trade. But for now, Vinny and I take your leave on Trading Hour. From us and the team that put this show together, thank you so much for watching. Halftime report for the next 60 minutes.